Welcome to this video on trade automation. Today in this video, we will try to discuss what is the advantage of automation and how automation can help you change the way you trade. So if you are an active F&O trader, so definitely you will be having ups and downs in your trading career. There will be a certain phase where you would have made a lot of money and there will be a certain phase where you would have lost a lot of money. So it will be like a roller coaster ride. You will be having highs of the gain and lows of the losses. So if you overall look at it, people who actually trade F&O over a period of 2 to 3 years, most of them end up losing money. So this is not something which I am telling, this is something which is out there in SEBI's report, where more than 90% of the traders who actually end up trading F&O lose money within 3 years. Before moving on to the video, I would like to tell you about the free webinar which we are conducting from Fintarget. It is happening on 6th of August in the evening. I have attached the registration link down in the description. It is absolutely free to attend. So I'm going to show you how exactly you can use Fintarget, and we are also going to give you some irresistible and exciting offers so you can make the best use of Fintarget. Register for the webinar. We'll be teaching one of the strategy frameworks which you can automate it absolutely for free. There is no cost to attend, but you can make the most out of it by learning how to automate a good strategy framework on Fintarget. Let us quickly take a look at the report proposed by SEBI. So if you take a look at it, in the year of FY22, that is 2022, nearly 40,000 crores was lost by retail traders by trading F&O. This number slowly started to increase as years passed by. In FY23, nearly 65,000 crores of overall loss was made by F&O traders. The number further increased in FY24, where the number became around 74,000 crores. And the last financial year, 24-25, so retail investors or retail traders together lost close to around 1 lakh crore trading F&O. One thing that has remained constant and consistent across all the years is number of loss makers. So it is around 90% of the traders who have traded F&O ended up losing money. So not just that, you can see year on year the number of F&O traders have continued to go up. So they have surged, more and more people are coming and trading, but they are also losing more and more every single year. So as we can see, the average loss per person has more or less remained consistent, where people have lost close to around 1 lakh every year trading F&O. So just because more number of people have come into trading F&O, the overall money lost by retail investors have significantly gone up. So when you take a look at it, can you actually beat the market? Is it worth trading F&O? So can F&O help you gain or help you make consistent money over the long run? The answer to this lies in what is your expectation from F&O. In case if you're a trader coming here with an expectation to double your money, in case if you're a trader coming here with an expectation to make 30-40% returns per year. So forget per year, there are a lot of people who come with an expectation of making 10 to 20% per month, right? So realistically, making 10 or 20% per month is not possible. When you come with this expectation and when you try to trade, this is when most of the people end up losing money. So this is not just one of the reasons to lose money. There are many other reasons why a trader cannot consistently make money in F&O. So let us just try to explore the reasons why exactly making money in F&O becomes difficult. So the very first one is lack of risk management, right? So these are some of the most popular reasons which people have stated why they think they lose money. So they don't know to manage risk well. So generally it tends to happen that when things are going in your way, right? So you usually tend to book the profits early. And if something does not go your way, so you're hesitant to book your loss. This is something which a lot of people face, right? So you just wait with a hope, okay, markets can sometime recover. So what if I wait for another 5-minute candle close? Markets can slowly try to come back. So you're hooked to the chart, you're hooked to the screen, you're continuously watching the market. So you're hoping that the market actually reverses or bounces back up. So this is actually a trap. So a lot of people, rather than trading the numbers, they trade their emotion. So this is one of the biggest reasons where they won't be able to manage the risk, because they're completely driven by emotion and not by logic. So the second reason is over trading. This is again one of the side effects of being emotionally involved in the trade. So sometimes you as a person won't be able to accept the loss, so you want to try to somehow recover the loss on the same day. So you try to trade more. After closing your trade, somewhere in the end you want to buy a call option with the hope that okay, markets might bounce and I might recover all my loss. So this is something which happens in day out basis for retail traders. And the third one is trading without an edge. So today if you try to go and ask an institution what is the advantage you have over retail investors or retail traders, so they are going to say that we have access to capital, we have access to technology, right? So we have some edge which we can use to beat the retail traders. But if we ask a retail trader, what is your edge, right? So there must be some edge or something that you have better than the person next to you or better than the institutions. So very likely we cannot have a lot of things better than the institution, but there must be something better than the person next to us, because F&O is a zero-sum game. So if you're losing, then somebody will be gaining. If somebody is gaining, the other person will be losing. So if you have a better edge compared to the person next to you, then you can survive in this game for slightly longer term. Next, trying to predict the market. So some people feel market is bullish, some people feel market is bearish. They randomly take positions, so they don't size their position well. They don't manage their risk well. They just go by gut feeling. They're trying to predict the market. But a person who is actually having money can move the market, while most of us just end up predicting the market, right? So next, lack of patience and discipline. This no need to say much. A lot of people personally would have experience. You won't have discipline when it comes to booking your loss, booking your profits. A lot of times you might think, so whenever I end up losing more than 1%, let me book all my losses. Or whenever I lose more than 2% in a day, I want to cut off all the trades. When that time comes to cut off all your trade, when you have lost 2% or more, so that is when your discipline actually comes at question. Will you be able to do it? So can you actually book your trades, or are you again hope trading, right? And then going to the next reason, trading without any review process or journal. So people randomly enter a trade, then next day again they take a random trade. They are not writing down why exactly they are taking the trade, how exactly the trade has performed, what is their risk to reward in the trade, what is the probability of their analysis. They know nothing about their trade, but they still want to end up trading, right? And finally, there is psychology traps like FOMO, greed and fear. This is again linked to our emotions. If we can't control our emotions well, very likely we are going to fall under these traps. Finally, misuse of leverage. So today SEBI is trying to tighten as much as possible. So again, without understanding that okay, leverage is a two-edged sword, so we often tend to misuse it. So what do I mean? So you don't really understand what is the exposure you are taking by buying options for your entire capital. So your expectation of buying an option that it should double or triple, but the amount of exposure you are taking by buying these options is quite high. And that's the reason you either end up making quite a lot of money very quickly, or you also lose a lot of money very quickly. So these are one of the major reasons why people actually end up losing money. So majority of these 91% of the people are here to make quick money, and that is one of the reasons why they fall to one of these traps. And since they fall to one of these traps, they also end up losing money. So most of the issues what we have addressed here, that is lack of risk management, over trading, trading without the edge, having no proper statistics about their trade, or lack of patience and discipline, psychology traps, all this can be avoided with a simple solution, that is automation. So if you can backtest your trades, if you can see how the trades are working, how trades have done in different market conditions, whether this particular strategy is good to use in the current market condition, this can solve a lot of things for you. At least forget about the institution, since it is a zero-sum game, you having edge with the data. So you knowing how the strategy works in different market conditions. You having an idea of what is the risk to reward and probability of the strategy. So you having the complete data about your strategy is going to give you a significant edge over a person who is next to you having nothing, right? So if the system, if the computer can enter the trade on your behalf, cut the trade on your behalf, right, manage the risk on your behalf, ensure that you don't overtrade, ensure that you don't fall trap to the emotions, right? So greed or fear, ensure that you don't predict the market. So when all this is done, you will slowly start to gain a significant edge over the person next to you, right? So now, if you ask me, Saket, what is the proof that automation can actually help me become a profitable trader, right? So I can give you a proof based on people who have already used Fintarget. So this claim is purely based on the users of Fintarget. So this is not considering the entire people. So if you take on the platform of Fintarget, nearly 28% of people are profitable compared to 9% otherwise. So you might say, Saket, this 28% number is not such great. It's not a great number. It does not give me a significant chance of making profit. Yes, you're absolutely right. So you are in a zero-sum game, and there are people who are having much more capital, much more better access to technology, and they will definitely be having a much better edge than you. But in spite of which, so people who do not use automation versus people who use automation, there is almost a 3x increase in the overall chance of making profit. Statistically, if a trader is having 9% chance of making profit, his entire probability is going to go up almost around 3x by using automation. Here again, I want to put a disclaimer. So I am quoting this based on the statistics of the users of Fintarget platform. There is a significant improvement in their profitability. Unlike earlier times, they don't wipe out their capital with a single trade, or they don't wipe out their capital within a short span of time. So there is longevity of capital, and there is a significant increase in the chance of making profit. So when I am making this video, it is not to give you a false hope that from tomorrow you can become profitable, from tomorrow you will stop making all the losses and you will only make profit. That is not the intention of this video. The intention of this video is to show you you can also increase the probability or increase the chances of being profitable by using data-driven approach, right? Now, if we were to talk about how automation can actually help us in our trade, one is emotion-free execution. So that means, so the system is going to execute the strategy based on logics, and there is no scope for emotion. So today you might be feeling, okay, market is bullish, tomorrow you might feel market is bearish. Today you feel like buying something, tomorrow you feel like selling something. So there is no scope for your personal emotion, rather it's only data driven. The next one is backtested strategies. So you are not, as it is simply executing a strategy, first you are testing it, seeing how the strategy has worked, seeing how it has worked in different market conditions, and whether the current market condition is going to be favorable or not, and later you end up executing it. So there is a lot of difference between both of them. And next one is consistent rule-based trading. So everything will be driven by rule, and reduction in screen time, the most important one. So as a trader, very likely from 9:15 to 3:30, you will be glued to your screen. So you are watching the charts, you are watching your order book, position book, continuously placing the orders, you are taking all the stress, you are anxious, so you are constantly in tension, all this continuously for 6 hours during the day. So once you reduce your screen time, where you don't have to sit in front of the screen, rather trade automatically, your stress levels, your screen time, everything is going to come down significantly. And finally, reducing manual errors. So manual errors can be something like entering your trade, or manual errors can also be something like lack of discipline, where you want to cut your trade but you are unable to cut your trade. So all those things are also going to get sorted. Finally, improved risk management and position sizing. So when you are automating it, so there is no scope for entering, you feel like entering more, you feel like buying more calls, you feel like buying more puts. So there is no scope for that. So it is going to be standardized, it is going to be system driven. So now, based on this, I am pretty sure you already would want to know how exactly you can start your automation journey today, how exactly you can start automating on Fintarget, right? That is exactly what I am here to show you. So let me end up showing you the overview of the Fintarget platform and how you can use Fintarget to start your automation journey today. Not just that, so we are also going to explore how exactly we can build strategies and how exactly we can backtest the strategies and later automate them completely. To start off with, we are going to initially go to fintarget.in. So this is the website fintarget.in, and this is the landing page of Fintarget. Once you land on Fintarget, you can start for free by either clicking on start for free button right over here, or you can click on login and later end up signing up. You can open your account absolutely for free on Fintarget. You just have to give in your basic details like name, phone number, email, and create an account for yourself. Once you have created an account, you can simply log into Fintarget by entering your credentials. So this is going to be your home screen of Fintarget. So Fintarget lets you both forward test your strategies and back test your strategies with help of Stockmock. You can also execute the trades in broker account real time. So let us try to explore the entire platform and see what Fintarget offers us. As soon as you land inside your account of Fintarget, generally it will be empty, right? So there will be nothing added, and we can start by creating our strategy or using some of the existing strategy templates by going to the strategy section. So once you go to the strategy section, you have pre-built strategies and custom strategies. So in pre-built strategy, we from Fintarget have given certain frameworks which you can actually end up using. So in case if you want to use Sensex expiry selling strategy, or in case if you want to go with Nifty intraday selling strategy, so we have certain strategies which are already pre-built, and once you click on the strategy, it will show the favorable conditions and the risk factors of this strategy. In case if you want to use this, you can simply deploy the strategy and it will now be available on your home screen, where you can either paper test it or you can run it using the existing account. So once that is done, now with Fintarget, you can also create your custom strategy. So today we will try to create a custom strategy and also end up backtesting the same. So to create our custom strategy, we can click on the create button right over here, and then we can start by naming our strategy. I'll name it as strategy 1. Next, you can select the index you want to trade with. So whether you want to trade with Nifty or you want to trade with Sensex. So let's try to build a simple system using Sensex options. So I want to trade with Sensex and I want to enter my trades around 10:10. So let us say after the first hour of volatility, I want to enter my trade after 10:10 and I want to exit my trades at 3:20. So we are automating it, and when you are automating it, you want to give conditions as to when you want to enter the trade and when you want to exit the trade. So here we are trying to build a time-based automated system. What do I mean by time-based system? So time-based system means you will be entering at a particular time and you will be exiting your trade at a particular time. In this case, we are going to do an intraday trade where we are going to enter at 10 o'clock and we are going to exit at 3:20. So this is a simple intraday trade. So next question comes, at 10 o'clock, what will I enter? So what is my idea of entry? So what we are going to do is at 10 o'clock, we are going to start by entering a simple short straddle. So to enter the short straddle, so we have to sell a ATM call. So I have selected option, sell, call, type ATM. So I'm going to sell a weekly ATM call and I'm going to sell a ATM put. Right? So now I have sold both call and put. So it is going to pick the ATM strike at 10:10. So whatever is the ATM at 10:10, it is going to sell both ATM call as well as ATM put. So post this, let us keep a stop loss to manage our risk. So I'll just keep a 50% stop loss. That means if I am entering my trade at 100 rupees, I'm going to keep 50 rupees as my stop loss for both my call and put. Right? So if the entry is 100, my stop loss is going to be at 150. So I'm selling. So since I'm selling, the stop loss has to be higher, right? So if my entry happens at 200, my stop loss is going to be at 300. So all I'm going to do is enter a short straddle and keep a 50% stop loss. So this is a very simple and basic system where we are going to enter at 10:10, create a short straddle and place a 50% stop loss. So we will save this strategy as it is. And with Fintarget, you can also end up backtesting this strategy. Once you buy a Fintarget subscription, so you're automatically going to get even Stockmock credits for backtesting, which you can use to backtest. So once I clicked on backtest, you can see these criteria are already filled and it is ready for backtesting. So let us try to backtest this strategy and see how it has worked over time. So I'm simply going to click on backtest and I'm going to scroll down. So with this, we are going to get a very good idea of whether the strategy is actually working or not. So you can see in the last 2 years, this strategy has given us an overall return of around 16%. So you can see the risk to reward is almost 0.6 to 1, and you can see that you are having around 65% probability. Not just that, you can come down and see how the strategy has performed across years. It has given 8%, 6%, 1% and so on. So you can also see the maximum drawdown of this strategy is around 18%, and the maximum drawdown is running for last 269 days. So now we have all the statistics regarding this particular strategy. So very easily we can infer this strategy is not actually a great strategy to execute because this has not given us consistent profit. So this is the advantage of a data-driven system, because you are going to know how this strategy has performed during different market conditions. So I can very well see if somebody is going to tell me that you can try using this strategy has not been so profitable and it is not worth executing it real time. So this is the advantage of automation, where you get to do a data-driven way of trading. So you get to decide whether the strategy is good or bad and later end up executing it. So now if you take a look at it, I have slightly changed the parameters. And if we take a look at the results, so this particular strategy has given us an overall 33% return in 2 years. Not just that, you can see the average monthly profit is around 1.43. The maximum drawdown is 3%, unlike the previous 18%. The risk to reward now is nearly 2:1, and it comes with a 66% probability. We can further scroll down and see year on year it is much more consistent when compared to the first strategy. So this is one of the pre-built strategies which we have on Fintarget. You can see how exactly this has performed over the past few years. You can see week on week or day to day what the results have been. So this way, an automation will help you get an idea about what kind of profit you will be able to expect. These are all the historical results, and it does not guarantee you the same result going forward, but you can still get a rough idea about whether the strategy is good or bad. So this is a advantage of automation, where it is completely data driven and not emotional, right? So you can try to analyze the market, try to identify patterns and automate your trade completely. So we do offer a lot of features for you to automate, starting from something like squaring of one leg, squaring of all legs, so moving stop loss to cost, wait and trade, re-entry, range breakout, journey, overall M2M stop loss, overall M2M target. Then there is something called as profit management system, where you can lock and trail your profit. So a lot more features which is going to help you change the way you trade. Not just that, we also have indicator based trading, which means you can trigger a particular strategy after certain indicator crossover happens, or if Nifty ends up breaking a particular level. So you can end up connecting your Fintarget with TradingView, and you can end up exploring TradingView automation. So since this is a beginner video, so I won't be going much in depth about how exactly you can start creating your own strategy, but I will for sure tell you to start trying out automation. So how can you start your first journey in automation? So simply create a Fintarget account, and we have certain pre-built strategies available in the pre-built section. So come to the pre-built section, so deploy the strategies of your choice and wait. Don't execute it in your account right away. Paper trade these strategies. So try to forward test the strategy. So choose this as paper, forward test the strategy, see how it is working, because the execution is going to happen real time. See how it is working, and if you're convinced, if you're satisfied with the results, what you're able to get from forward testing after testing it out for maybe 1, 2 or even 3 weeks, so then slowly you can start deploying it with one lot. So first we are going to start it off with one lot, Then slowly, in case if you feel more comfortable, you can start deploying a larger chunk of capital in the same strategy. So again, mind you, I'm not going to tell you that for sure from tomorrow you are going to become the most profitable trader out there. So I will tell you, at least adapting a data-driven approach in your trading is going to significantly increase the chances of success or chances of making profit. So I have already stated the statistics earlier. So definitely you can change the way you trade. If not, one thing is for certain. So adapting a data-driven approach might not make you the most profitable trader, but certainly it will avoid you from wiping out your capital. So you can see certain systems which have been running for 2-3 years plus gives a drawdown of lesser than 3 or 4%, and they have consistently delivered returns across time period. Again, these are all historical. It does not guarantee any future returns. So that is something which you have to make a note of. So just be assured, so whatever I am showing here or whatever you backtest are all based on historical data. So just because something is showing 30% does not mean that even going forward next year you will be getting 30 or 20%, right? So this 30% return shows that historically it has delivered around 17% a year. So the first thing I told you is whenever you come to the market with a high return expectation, you are very likely to fail. So nobody is simply going to reward the other person with 30 or 50% return unless you take higher risk. Whereas using a data-driven approach will surely help you to at least match the market performance with a decent amount of risk which you can take on your option trading. First, I would request you to explore automation. Do not try it in your real account. So try to see whether it is working for you. You will start to feel the difference because you will be less involved, less emotionally involved in the trade. So you will not be actively looking at the screen. So you feel that a lot of times when you would have not booked as a human, computer would have booked for you. So you will realize, okay, later when the market reverses, thank God it was the computer trading and not me. Similarly, even with profits, it does happen that when you would have not booked the profits, system would have booked it for you. So these are some of the advantages, and in case if you're serious about option trading, if not completely, adapt one portion of your capital with automation. So if you're trading with a capital of let's say 10-15 lakh, you can start your automation journey with as low as 3 to 5 lakh. So adapt one portion or change one portion of your trading from discretionary to automation and see what difference it is going to make in your everyday trading. So this is the basics of automation, what is the advantage of using automation and how you can start with your automation journey. So again, to start off, just open a Fintarget account, come to Prebuilt Strategies. So choose the pre-built strategy of your choice. You can either go with some expiry selling strategies, you can go with some expiry buying strategies, you can go with some intraday selling strategies in Nifty. So choose the strategy which you prefer, which you like, deploy the strategy, paper trade, test it out. If it is working, continue using it. So we will also be organizing a lot of free webinars from Fintarget side. So make sure you attend these webinars to get a good idea on how to create strategies. And finally, if you're interested in learning more such data-driven approach, so at Quick Alpha, we also have something known as the learning path, where we teach you how to build data-driven systems in both options and equities. So in case if you're interested in that, make sure to go to quickalpha.in to know more about the same. And you can also contact our support team who will be guiding you anytime. Thank you so much for joining, guys, and hope you enjoyed watching this video.